Hi, friends. Welcome back to another session of RPC Money Talks, where we get real about money and what it takes to run the kind of business and life that lights you up. I'm Katie Mass, Director of Community here at Rock Paper Coin, and your host today. And if we haven't met before, we're a payment platform built for small business owners just like you that's designed to make invoicing, contracts, and payments easy and affordable, which we all need. Today, we are going to talk about the money stuff your group chat is too scared to bring up, but your bank account desperately wants you to understand. Everyone carries some sort of money shame until someone finally explains the thing that we are too afraid to ask. And that's what today is for. We're talking taxes, we're talking write offs, and all the year end moves you will absolutely regret missing. And joining us is the financially savvy best friend we all wish we had, who tells you, no, do not wait till April. Handle your financial business now so future you isn't crying later. It's the financial queen and CPA herself, my friend, Brittney Suttle. My friend, welcome to Money Talks. Can you start us off with a little intro about you and all that jazz?
Yes, absolutely. So, like Katie said, my name's Brittney Suttle. I'm the owner of Knies Co., which is a virtual firm. We specialize in bookkeeping, tax, fractional CFO work, and we help female entrepreneurs across the U.S. with everything finance, everything you can think of regarding your business. We're there for you to be kind of like your right-hand man in helping you with questions and all of that. So I really started out as a personal finance blogger. So my passion, my blog was named Brit and the Benjamins. It was the things that, you have to laugh at yourself back in the day.
Love that.
But I started there, and it was really because I had a passion for helping women with their money. And by trade, I was a CPA, and it just kind of shifted over the years to helping women with their business finances versus everything being personal finance. And I started this business, and it just took off. So I love what I do. I love being able to provide advice and add value to our clients and just our community. And I'm really excited to be here today to talk everyone's favorite business subject, taxes. So,
Oh my gosh, I have got to tell you that taxes are scary, money is scary, all of it is so scary. But, I really think that every generation is getting smarter. I feel like every year we're getting a little bit wiser, and the help of social media is actually helped with making this a little bit more comfortable. I mean, I think about
great.
like our parents' generation, and this was a no-go, like no go.
Mhm.
But on the same hand, social media has also made things a little bit scary since we're now taking accounting advice from people on TikTok. So, and we're going to get into that a little bit later. But I'm so glad you're here to give us the real, because that's
Thank
what
you.
we're all here for.
Yes, me too. I love a good TikTok reel about taxes, but I mean, our tax code is like so thick. There's so many nuances that people don't understand. But I think everything is a great conversation
Yeah,
point
yeah,
when it comes
absolutely.
to that on social media.
I love that.
Yeah.
So, before we get started, I ask this to every single guest because I think it's important and I love how different everyone's answers are. So, before we dive into the really fun details, um, can you tell me why this conversation is so important for you to have with us today?
Yeah, I think, as entrepreneurs, we get into our business because we love what we do, right? And then we get into it and we realize, oh my gosh, there's so much more to it than I ever could have imagined.
What have I
There's,
gotten myself into?
yes, logistics and customer service and your marketing and, you're the financial team. And that's kind of how everyone starts, and things can snowball, and then all of a sudden you're playing catch up. And I think, the earlier you can do some of these things right on the financial side, it's just like with anything financial, it compounds, right? It's the eighth wonder of the world is compound interest. I think it's knowledge is right up there too. The more knowledge you have around this, the sooner you have it, the better because you can take advantage of these strategies and these deductions and these write-offs year after year after year. So the earlier you know some of these tricks of the trade, I think it just makes you wealthier, and that's really my goal.
Yeah. Oh, I love that. Thank you for that. So, before we dive in, I do want to normalize something for everyone that's attending this real quick. So, as we mentioned, most people feel confused and embarrassed or even low key, the ick when it comes to taxes and money.
Yeah.
But I want to let you know there are so many people that registered for this session. You are not alone. In fact, the number one emotion around money is shame, but shame keeps people broke, and information is what gets you paid. So,
Yes.
you are all brave. I'm so proud of you for being here. There were so many helps. I need this. Please help me in the questions in the comments when you registered. And we are here. We are here to help you with this. And we are on a mission to get you the answers you need. So, what I will ask you is if you have questions that you do not feel comfortable putting into the chat, that is okay. Go ahead and just send a private message. Sari is in the comments. I see you all talking to her already. She's going to get them down, and we are going to make sure that we get them answered and sent with the replay from Brittney because this is a huge topic and we all want you to get the help. We also have just a large array of questions during this session. So hang in there with us. If you're a seasoned tax professional that knows the game, totally just wait till the end, hear the entire session. And if something's not relevant to you yet, it might be relevant to you very, very soon. So make sure that you soak up all this information. So, and with that, let's officially get started. So I actually want to first talk about the car thing. So, okay, because
Yes.
every November, and I'm seeing it every November, the internet is like, buy a G-Wagon right now and write it off. Okay. And it doesn't help that all
Yeah.
the car commercials right now are about gifting a car for Christmas. And so somebody's like, well, should I be gifting myself or somebody else a car for Christmas?
Don't you
And it
love
is.
that? Because if someone gifted me a car, I would be not too happy because I'm like, I would want input to this.
Yeah. First of all, wait. Also,
Thank
if
you.
you saw it on my Pinterest board, it might not be updated. I may have changed
Yeah.
my mind already. Like, we need to have a conversation about this.
Right.
So let's talk about the elephant, or shall I say the G-Wagon in the room, because the internet becomes the wild, wild west of tax advice, like we just mentioned. And I think, if I have this correctly, what most people don't realize is that bonus depreciation rules have changed, right? They change consistently. The
Mm-hmm.
100% write-off window is not what it used to be. Certain cars don't even qualify. And even when they do, it only reduces your taxable income. It doesn't make the purchase free, unlike what our friend David from Schitt's Creek really wants us to believe.
Yeah.
So, girl, debunk this for us. When does buying a vehicle actually make sense as a tax strategy versus a panic purchase that people
Yes.
normally end up regretting?
Yes. Um, I will start off with this. So, I am not a car person by any means. My car gets me from A to B. I know there are people that are car people and they're like, if I could get a new car every 2 years, I would. And that's great. You go Glen Coco. And if we can have a tax strategy around that, even better.
Right.
But like you mentioned, it's not like it's a dollar for dollar return on whatever you purchase. So you buy that G-Wagon for what do those even go for now? I don't even know. 100, I don't know. Let's
Well
say a
over a
hundred
hundred thousand
grand.
dollars. Yeah.
Because
Yeah.
cars are way too expensive now, in my opinion. You buy that,
Yeah.
you can get a deduction for that, but you're gonna spend 100 grand on that to save, maybe 35 or 40. So you're still out 60 grand. So it's really looking at, the entire picture and the entire cash expenditure, not just the tax strategy. So for me, when I say like what's a great time, when's the time to buy a vehicle? It's like, okay, when you need it. That's a great time, but we can be strategic around when you need it. So with business vehicle deductions, there's a lot of specifics that come into play here. So one, if you're using the vehicle for business and personal, so you don't have another vehicle that you can go and, go to the grocery store, take your kids to daycare, whatever. If you're using that same vehicle for that, no matter what, you have to track your miles and you're going to split costs between personal and business. So if you drive 10,000 miles in a year, 1,000 of those are business, 9,000 are personal. You can only deduct either standard mileage around those or 10% of your vehicle expenses. So keep that in mind if you're mixing the use of your business vehicle. Now, there are two ways to write off vehicle costs. One is the standard mileage rate, which is if you drive 1,000 miles, I think it's 70 cents this year. You get 70 cents per mile. So that would be your deduction. The other way is to do actuals. And this is where all the TikTok strategies kind of come into play with the bonus depreciation and all of that. So if you drive your vehicle for basically mainly business, you can write off all of the, whatever percentage of that is. Let's say it's 90%. Gas, insurance, car washes, repairs, anything related to that vehicle, you can deduct 90% of that as a business expense. On top of that, you can also take depreciation on that vehicle, which can be pretty significant. Now, normal depreciation works like this. Let's say for a vehicle, the IRS says, hey, typically use a vehicle for 5 years, you depreciate the cost over 5 years. So for a 100K vehicle, you get a $20,000 deduction every year. Great. That deduction maybe saves you, again, 40% if you're in a high tax bracket. So 40% of that 20K. So pretty significant. But there's also Section 179, which you can take a large chunk of that in the first year, or bonus depreciation. 100% bonus depreciation actually just came back into play with the one big beautiful bill. It's a mouthful. That came
It is.
back this summer, or that was signed into law this summer. So you can take bonus depreciation on a large portion. Now, it is limited based on some luxury vehicles and whatnot. So there are some specifics around that, but you can essentially get a larger amount of depreciation in year one, which really means that you're going to get a higher tax deduction. It's going to mean more cash in your pocket this year than waiting like 5 years to get that.
Interesting. Okay.
Yeah. And the play is, if you want to be strategic about it, to take some of those like Section 179 or whatnot, you have to use your business, or excuse me, use your vehicle in your business over 50%. And the closer you are to 100%, the more deductions you'll get, the more depreciation you'll get to take in that first year. Because the bonus depreciation really hits in that first year that you buy it. So if you buy a vehicle, let's say you're looking at one right now. If you buy your vehicle December 15th and then you drive it just for business for those 15 days before the end of the year, it's 100% business. You get to write off much more in bonus depreciation this year. Versus if you wait until January, you purchase the vehicle. Now it's probably much harder to get to that 100 business use because you're also using it for, grocery runs and whatnot. So, yeah.
Okay.
So if you're looking to buy a vehicle within the next few months, typically it's good to purchase towards the end of the year so that you can hit that 100% or close to 100% business use. You get more depreciation with the bonus depreciation, Section 179 depreciation in that first year, which means a higher deduction, which means more cash in your pocket.
Love. Okay. Heard it
Does that
here
make
first.
sense? That's a lot.
Yes. Yeah, if anyone has any other questions or if that did or didn't make sense, go ahead and ask some questions. I do want to remind everyone, go ahead, please, and change your settings to chat with everyone. And then that way everyone can see your questions. Uh, if you would do that. I don't know why Zoom doesn't just make that mandatory. That's just so silly. Uh, but I
Mhm.
do have a question that I do want to just, before we move off the car situation, it does
Yeah.
say, what's the best way to handle a vehicle if it's paid for, mileage or expense? I'm assuming there's no depreciation if it's already paid for.
Whether it's paid for or not has no implications on depreciation. So if you do have a loan for the vehicle, the interest on that loan can be deducted, but either way, it's going to be depreciated the same way because it will be considered an asset to your business that will be depreciated, whether you have a loan on it or not. That doesn't affect the depreciation of it.
Okay. So let's say it's not a car. So for everyone that's sitting here and they're like, I'm not buying a car this year. Um, every year, small business owners still hit December and start asking, should I buy something? Do I need to make a big purchase? We were just talking about this because it's about to be Black Friday and you need to update your laptop and you just had a microphone snafu and I just happened to say, "Oh, hey, lucky you. It's almost Black Friday." And I know how complicated Black Friday shopping is because I'm like one for you, one for me, one for you, one for me. And I'm just so easily targeted, right? All of my favorite brands land in my inbox that I've shopped at all year, and they're like, now's the time to stock up. And I'm like, you're right. It is the time to stock up.
Mhm.
So with that, what are the biggest year-end moves that people think they should do, and what are the ones that actually matter?
Yeah. Yeah. So to your point about, buying things before year end. Yes, that is honestly a good move. If you can accelerate expenses to pay them this year, you will be able, typically everyone's a cash basis, meaning if you spend the cash, collect the cash, that's when you're going to record it as income on your tax return. So if you spend the cash this year, you'll get the deduction. Great. I tell people like, you don't want to spend it just because,
Yeah.
right? Because again, you'll be spending $1,000 just to save maybe 300. So don't buy something just for the tax benefits. But in my case, I need a new computer. Yes, definitely going to try to take advantage of a Black Friday deal. Definitely going to do it before January when tax season hits. Like it's
Yeah.
good because then I can write that off this year. So anything like that maybe you're looking to potentially purchase in Q1, maybe it's a conference or some travel that you
Mm.
could purchase this year, that you're going to take next year. If you're purchasing it this year, you will get that deduction. Maybe it's like a
I think the
course.
conference one is a really good one because you
Hmm.
normally sign up for those so far in advance. And it's one of those things that it's really hard to get everything all at the same time. It's like, okay, I got my conference ticket. Now I need a hotel. Now I need flight. Now I need
Yes.
Uber. Now I need all these things. And so it is kind of one of those things to revisit because
Hmm.
I know I've got a couple personal conferences, even the one that we met at last year.
Yeah.
I'm going back to it, and it did not dawn on me to purchase my flight this year
Yeah.
versus wait, because I normally would just wait, but
Yeah,
I can just go
exactly.
ahead and get
Yeah.
it.
It's a great move to kind of book the travel for those conferences or,
Yeah.
anything business related that you may be attending next year.
I love that. So,
Yeah.
what's a deduction that sounds sketchy, but is actually 100% legitimate that entrepreneurs either forget about or don't know about?
Yes. Lots sound sketchy.
I
Lots are sketchy.
know, I feel like we could debunk some TikTok myths. We
I
should have
know.
like
It's like,
sat and
which ones,
watched some TikToks first.
which ones sound too good to be true and are. I will say one that maybe sounds s sketchy, and you do have to do this right, but for any of our S Corp owners out there, um, you can actually quote unquote, I don't want to say hire because it's not like a W-2 thing, but hire, let's say your spouse to be on your board of directors. Um, they aren't, or elect them into your board of directors, whatever you want to call it. And then you can have, annual board meetings at a place of your choosing. And it's kind of, I don't want to say you get your travel for free, but your travel can
Yep.
be a business expense. So you could have, let's say, you assign your spouse to your board. You have an annual board meeting. Let's say you want to go to, a cabin in Tennessee or whatnot for a long weekend in December. Great. That can be your annual board meeting. You have to make sure, like, you record minutes, you have to have an agenda, like, it has to be valid.
Yeah.
But yeah, but if you document everything,
Mhm.
definitely valid business travel. And then all of that, if you have airfare or mileage or, the cost of the cabin, your meals while you're there, all of that can be considered a business expense. So it
Love.
sounds sketchy and there are nuances around it, but it is valid, especially if I mean, your spouse should actually be helping you and consulting on the
Yeah.
business. But for a lot of us, I think that happens anyway. Like we are at least for me, like my spouse also owns a business. We're always
Yeah.
talking business.
Whether they want it or not, they were
Yeah,
involved in the business and they are hired. You're just not reaping the benefits from it. So might as
100%.
well. Oh, this
Might
is
as well
great.
reap.
Okay, tell us in the chat where you're going, everybody. I want to know where everyone's going. Tell me where you're going.
Yeah.
This is great. I love this. Okay, so let's talk income for a second because it's what we all need to live. But so many people, especially right now, but some all the time, are running project to project and
Yes.
the funds are gone as soon as they hit the account.
Mhm.
So what is one thing in particular that everyone should look at this week to know if they're going to be financially okay going into January and Q1?
Yeah. So, obviously look at your cash balance, projected cash flow, and what you did this past year. So, a lot of businesses are like this, right? It's like months of feast and months of famine.
Feast and famine. Yeah.
I was like, I don't know if my hand gestures were following my words, but months of feast and months of famine. And what often happens is in months of feast, we'll pull out a whole bunch of money. In months of famine, it's like, oh my gosh, where is my next
Yep.
paycheck coming from? Right? Like, am I going to keep the lights on kind of thing? So, what I like to do is kind of study that rhythm in terms of owner's personal pay. So what I would do if you're in a very cyclical, industry, which a lot of us are, um, look at your past 10 months or so. So one, get your books updated. Like you can't strategize if you don't know what you brought in, if you don't know where you're spending your money and what's left over for you and for
Yep.
taxes. So get all of that updated. Um, I know for some people that isn't fun if you're currently DIYing it, but put a nice little block on your calendar, grab a spicy margarita and just go at it, Like make it as
That's
fun as
right.
you want.
Yeah.
Um,
Bring a
do,
friend with you because chances are they're not doing it either and go meet and do it together.
listen, I just saw this thing on social media called admin parties. It was for like friends where people be like, oh, I'm like, people just get together and kind of like potluck it, like charcuterie board and whatnot, and just like get stuff done that you don't want to do. So you
Oh,
can do that for your business. I like, what a wonderful idea,
so good.
right?
So good.
So
I want
do
to host
that.
this.
Yeah. So do that. And then I would really project out, okay, what am I forecasting for the next 3, 6, 12 months? Not only income, but expenses. Really see like what am I going to have to pay out? What is going to be left over for me? And then what I like to do is look at, okay, if my, let's say over the next 12 months, my profit is expected to be 60K. I'm going to pay myself at a minimum 3,500 each month. And whether it's a feast or a famine month, I know I'm going to get that 3,500. So the feast months are going to support my famine months. And that way it brings consistency to you as an owner. And
Yeah.
if you do, and then we're going to leave some for taxes. So I know like 3,500 times 12 doesn't equal to 60, but we got to have a little bit in there for tax savings too, and just some unexpected costs. But at least you'll have that. If you do better than that, you have excess cash, great. You can pay yourself a bonus. But I really like for business owners to set themselves up to have some consistency in their pay. So
Yeah.
that's what I would do. Catch up your bookkeeping, forecast what you are expecting for this next year, and then develop what you want that consistent paycheck to be to yourself each month.
Yeah. And host an admin party.
And
I
host an
mean,
admin party.
I'm so excited about this. I love Amanda, Portland area. Let's make this a thing. I'm not in Portland, but like, I'll go to Portland and have an admin party with you. Like, let's do this. We got to make
Business
this a
travel
thing.
expense.
I love. Okay. So let's talk about the messy part of this topic because really the IRS isn't mad, right? They just want you to follow the rules.
Yeah.
But sometimes it is easier to just make it all the IRS's fault. Okay. Like it really is. It's just easier sometimes. But everyone loves to say, make it a business expense. And I know we just talked about this, but what is the line between, okay, this is a really good strategy and waving a red flag for an audit? Because
Yeah.
that's the big messy word that everybody really wants to avoid.
Yes, 100%. Um, and I mean, there are specific rules around certain things. So some things to me are like, if you would use common sense, you'd be like, oh, this would probably be a business expense, but the IRS still says no. Um,
It
so
really
for
quick, is there a list? Like, I'm sure there's a list, kind of, but does it change every year? Does the list change every year? Like, do they take off or do they just add? Like, I think that's the confusing part is, and where people blame the IRS because this is
yes,
information that should just be easily and readily available and not set us up for
right.
failure, but it's
Yeah.
not. And it does seem like it changes, but then you're not really aware that it changed.
Changes. Yes. Okay. So I wouldn't say there's a list per se, but there's categories and examples and things of that nature on irs.gov.
Okay.
But it's also, I think, again, nuanced based on your business, right? So for me, I cannot write off makeup costs because I'm in this room by myself, like most days. I mean, it's not happening. But can a makeup artist write off makeup costs? Yes. The really fine line or the line I guess the IRS draws is that it has to be ordinary and necessary. And then there's some specifics around certain things. So it has to be an ordinary expense for your business, meaning that, other businesses in your same industry doing your same line of work could also basically be assumed to incur those types of expenses. And then necessary, as in, this is something that does lend itself to helping your business. But then there are specifics around like meals and clothes and things like that. Now, some big red flag areas, I would say, maybe where people take advantage of things are meals. So just be cognizant of that. Really high home office expenses, although they can be valid, and that's the thing. Like I
Right.
have a client who she makes candles, and for a while, her entire basement was like her candle manufacturing. She had like rooms on her main floor, which was just like storage for, I mean, she was running an operation out of her house and she had really high home office expenses because most of her home was honestly business use. So, there are some of those red flag categories. I would say you just need to be able to justify. And if you are an entrepreneur, I also always say, like, make sure you're working with a CPA or have a CPA you can reach out to because
Yeah.
everything is nuanced. You can just shoot over like a, hey, is this an expense or can I make this an expense or, that kind of thing, because it can depend business by business.
Yeah. Yeah. I'm curious, is over deducting a real thing?
Not necessarily. Now, if you report losses for multiple years in a row, I'd have to look at the exact numbers. I think it's like 5 years or something, then that's more of a red flag. But there are many businesses that report losses for 5+ years, like especially tech. I think
Yeah.
Amazon was one of them, and look at them now.
That's crazy. Let me tell you, I can concur.
Yeah, so I don't think there's necessarily over deducting, um, especially if it's valid. But there's also, if you are an entrepreneur, you also have to think like, what's your end goal, right? Because some people I've seen entrepreneurs in the past kind of shoot themselves in the foot because they are trying to write off everything and anything, and then they go to apply for a mortgage, and their income just looks so minuscule because they've basically been deducting away.
Yeah.
So, you have to look at those outside situations as well. As like it's great for obviously deduct everything you can. That's great for tax savings. But also if there are some other things that play, you might want to be a little bit more strategic about it.
Yeah. No, that makes sense. And
Mhm.
then what what is a reason that so many people, or, maybe it's just one category in particular, but what's the reason that people overpay in taxes year after year? That kind of makes you feel like a broken record at this point, that you really just wish people would, let's just stop this. Stop it.
Love it. Yeah. What I see more than most is when people don't do their bookkeeping correctly or have someone doing their bookkeeping. And this is not like a shameless plug because we do bookkeeping, but we
Yeah.
have so many new clients come to us or people coming to us with consultations, and it's like they've double booked revenue. There are months of transactions missing, which is just, you're just missing months of deductions. I mean, they're relying a lot on QuickBooks to kind of do a lot for them. And
Yes.
QuickBooks is only
Right.
as good as, who's driving it. I hate to say, but like we just see
Yeah.
so many mistakes in that. So it's not only bad for you as a business owner in terms of not having any visibility to how well your business is doing, not having any visibility as to how much you can pay yourself or need to save for taxes, but it also costs you more in taxes because we're seeing, like I said, double booked revenue, missed deductions. It's crazy. The other thing I think is kind of sometimes the low-hanging fruit. So the home office, the vehicle mileage, and then even like business use of your personal cell phone, and your home internet. So if you have a cell phone and you use it for personal and business, which I think a lot of us do, you can still write off a portion of those costs, to your business. And even if you get a new phone, a portion of that new phone cost, if you're spending $1,000 on the new iPhone, I don't even know what version they're on right now, but whatever that is, you can also write off the business use percent of
Yeah.
that. So I think it's just some of those things. Some things, it's just a lot of things that you're probably already paying for personally that you don't realize you are also utilizing in your business as well, or don't realize it can be a deduction that way.
Yeah. Okay. And lastly on this, before we move on, we've got a super fun topic coming up that I can't wait to dive into here. But if someone, because I know this is a lot of people, if someone hasn't tracked anything all year. I'm talking not a single thing. Nope, no
Yep.
judgment, no
No
judgment.
judgment.
Been there, done that. Uh, what deductions can they realistically still capture before filing? Or if it's, I mean, and I get it. Sometimes it's just too much has gone on and it's going to be almost impossible to catch up. So like, where can they take a deep breath and know they're going to be okay?
Yeah. There's always time. So don't worry, you are not alone. We see this quite often. So
See? Totally fine.
no judgment. I mean, it is what it is. You should see we have, I own my business, but we also own real estate and the books for our real estate business right now, like I haven't caught them up in like 3 or 4 months. Just it's just they're
Listen,
there.
from words from the expert. It's going to be fine. It's fine. We're all fine.
Sometimes, yeah, sometimes you don't have time, and that's okay.
Yeah.
Know this, there's still time to catch up. So you still have access to all of the deductions for everything that you've obviously already purchased or run through your business or whatnot. There is still time for that. And if you need help, I know there's a lot. We typically don't do like cleanup services, but I know if you're interested, just reach out. I can refer you to people that do like one-time cleanups and can help you just get everything cleaned up for the year so that going into tax time, it's off your plate. You don't have to do it and it's ready to go. You can just give that to your CPA. So you can still essentially get every single deduction you would have otherwise if you had had clean books.
Great.
Yeah.
Heard it here. You're
Yeah.
okay.
You're
You're all right.
okay. And you
You're
can
okay.
always extend your tax return. So I know people think it's due April 15th, and typically it is. But if you need more time, you can have more time.
Yeah, that's right. Okay, so I want to briefly, very quick, stop into the world of S Corp for a second
Mhm.
because this one is a turning point for a lot of entrepreneurs, and it's actually the question we get the most when having any kind of tax conversation. And I know that a lot of people wait years too long to elect into S Corp status. And I actually recently had a conversation with someone who said, I don't think I qualify for that, and my business isn't that fancy. But it's not about being fancy. It's about saving money on self-employment tax once your profit reaches a certain level, and I mean, so many other things. And so this is a perfect example of where good and honest advice matters. So break it down for us real quick on make it super easy on who should consider it and
Mhm.
who shouldn't.
Yes. So who should consider it is businesses that have consistent income or profit, or you can expect to have consistent income or profit. If your income is great this year, but you're like, it ebbs and flows year to year, it might not be the best route for you because there are additional costs that come with being an S Corp. And it could be that the tax benefits don't outweigh those additional costs. So you want to have consistency in the level of income and profit that you're going to have. Two, I say once your taxable profit from your business, so whatever you're showing on your tax return is the amount the IRS or whatnot is taxing on your business, whatever that taxable profit is for your biz. Once that is 20,000 more than what you'd pay yourself in reasonable compensation, that's when you want to have the conversation with your CPA. I always say have a conversation before you make the election.
Yeah.
Now, what is reasonable comp? Great question. Um, Basically, as an S corporation, you have to pay yourself as an employee of the business. You kind of split yourself into two personas. I always use the example of like Beyonce and then her stage presence of Sasha Fierce. You get to do that too. You're like Beyonce owner, Sasha Fierce employee kind of thing. So you split yourself into two personas. You get paid as an employee, just as if you hired Jane Doe off the street. You get a W-2, all of that. And then you pay yourself as an owner. You invest in this business, you're going to get distributions. Now, as an employee, you're going to have to pay yourself reasonable compensation. So if you were to hire someone to do your job, how much would you have to pay that person? What's that range? Let's say it's 50,000. So let's say you're like, okay, for what I do, I'd have to pay someone else 50,000 to do that. Great. Once your taxable profit is 70,000, that's when I would have the conversation because at that point is generally when the tax benefits will outweigh the additional costs of being an S corp.
Amazing. Okay, so basically, if your accountant has already begged you to become an S corp, it's because you're ready.
It's because you're ready.
And they're not dramatic or fancy or trying to get you into a super cool club. I mean, they are, but
Right.
but it's because you're leaving money on the table, not
Yeah.
because it benefits them in any way, not because of anything else. So definitely, definitely, definitely listen.
Yeah. And I will say this too. We have and Katie, I can send this to you if we want to send this out, but we have a free course on S corporations that just gives you some of the details behind like what is it? What are the additional costs? When should you make the jump? And just gives you some background on it. And it's, I mean, you can do it in what, I mean, I think it's like 20 minutes. It's really just like a short informational, just to give you enough education to go into a conversation with your CPA.
Yeah.
So
If
I'll
you're
send that
interested,
to
let
you.
me know in the chat if that would be interesting. And if you want that link, that is incredibly generous. I think that would be
Yeah.
amazing for so many.
Yeah.
And I do want to quickly say, Cassie said, if your income is an S corp and it's sitting in that high yield savings account, and you want to use the money you have to pay yourself distributions first. Does that make sense? Did I read that
Okay,
right?
so you have to pay yourself, if you're actively working in the business, you have to pay yourself wages. So before you can pay yourself any distribution, if you're actively working in the business, you need to pay yourself wages. Now, you're not stuck just paying yourself your wage. You can also take additional compensation via distributions. So if you are paying yourself via wage, salary, paycheck, and there's excess sitting in your business account and you're like, I'd love to pull some of this out, you can. Absolutely.
Okay, great.
I think
Cassie,
that
this
answers it, but if not, that's
Yeah,
fine.
Cassie, we'll make sure that we connect you with Brittany so that you can get a little bit more clarification on this too, for sure. Okay, this next little section here, I'm excited about this. It's gonna raise some eyebrows. Do you see me hesitating a little? I'm like, here we go. It's gonna raise some eyebrows. And people were telling me that they were most interested in hearing about this today because they were like, what? Um, let's talk about hiring your kids because some people think this is scammy, some people think this is weird, and some people swear by it. So I'm here for this conversation. So, Brittany, is this legit? How does it work? And what should people not do?
Yeah. So lots to unpack. It is legit for sure. Can be a great tax strategy. In the accounting world, we call it like income shifting because you're shifting essentially income from your higher tax bracket to your child's basically 0% tax bracket. So if you pay them $10,000 and your tax bracket's 35%, great. You just saved $3,500 in taxes. So it can be a really good strategy
Yeah.
for that reason. So how this works though is there are some specifics around it. You have to hire your child as an employee to get the full benefits of no income tax, no Social Security, no Medicare, no unemployment tax, which usually all get applied to an employee. So if they are 17 and under and you pay them as a W-2 employee, tax free. You want to follow, again, all the laws just as if you were hiring any other employee. So you'd want an employment contract. You would set them up with your payroll provider. Money would get deposited into a checking account in their name. Now, I know a lot of you are like, whoa, don't want my kid to have that kind of access. You can be a custodian on that account too, so that they're not like 10 getting, $8,000 and buying Legos with all of it. So you can do that. But It has to go into an account, a checking account with their name on it. And then essentially what that is, it's a business deduction for you. So you get to take it as an expense to your business. It lowers your taxable profit. And as long as it's under the standard deduction for them, which is 15,750 now, I think, after the one big beautiful bill for single taxpayers. So as long as it's under that 15, 16 grand, they're not going to pay taxes on a penny of it again if they're under 17. So
Amazing.
um, very beneficial. Now, I like to always come into this with some caveats. Major red flag if you are paying your children exactly $15,750. Like you are paying them the exact amount that is the standard deduction, red flag. Um, it also has to be reasonable comp. You cannot pay your child $200 an hour to clean your office. Like, no one's going to think that is valid. I like to use the neighborhood kid rule. What would you pay a kid in your neighborhood to do this job? Pay that to your kid. Also has to be for work that they can do. My 5-year-olds, in no way, shape, or form, can do anything for my business right now. You're like, oh, couldn't he clean your office? No, he
Yeah.
destroys my office. He just broke my like podcast mic like 3 days ago. So
Hence the Black Friday shopping.
hence the Black Friday shopping. So while I would love to say yes, taking advantage of this, I currently am not because my kids cannot take advantage of it right now just because of the ages they're at. But that doesn't mean I'm never going to. And I want you all to know there are still like, let's say you're like, oh my gosh, my kid's 14. I've missed out on so many years of doing this for them. Trust me, you still have time to take it, take advantage of it this year and going forward. The big play here, so this is where you can be really strategic with the tax law. And if you really want to generate some generational wealth, the big play is if you pay your children via your business, you get the tax deduction, great, tax-free income. They put that money, now they have earned income. They can now invest that into a Roth IRA because you have to have earned income to invest in a Roth. Now they can invest in a Roth IRA, which you get taxed on up front and then it grows tax-free. Now they're under the standard deduction. They paid no tax on it. So essentially they put in this tax-free money. It's going to grow tax-free until the age of 59 and a half when they can pull it out. Then they can pull it out tax-free.
Amazing.
Now, if you just do for 5 years, you put $6,000, let's say from the age of, I don't know, 12 to 17, you put in $6,000 to their Roth IRA for those for 5 years. Just let it sit there for what, the next 40 or so? I think I did the math here. It's like a 6 or 7% interest rate, whatever. They would have like $1.4 million in their Roth IRA, all tax-free money. So it's like such a great way too, if you do have some excess at play, that you could really generate some wealth for your child, especially in the climate we're in where student loans are so high, buying a home is so high. Like they could then in their 20s, instead of trying to like fund their retirement so aggressively, they could then use that to buy a home or to pay off their student loans or whatnot. So it's a really good strategy there as well. But you can also use those funds. You don't have to put in a Roth IRA. You could use it for their summer camps or other things that you're already spending money on. They can now just pay for them out of their earnings.
I love this. I love
Yeah.
this. Anyone in the chat, tell us if you've done this or have considered doing this, or maybe are now even consider doing this. I
Yeah.
think this is amazing. I think this is fascinating.
It's
Um,
one of the best, yeah, I think strategies for generating wealth through your business that
yeah,
W-2 workers just don't get.
right,
Yeah.
exactly. Yeah.
Yeah.
Jasmine says, I don't have kids yet, but I'm taking notes. Yeah,
Yeah.
this is the stuff that you just don't know. And these are
Mhm.
these are the conversations that you just don't have. right?
Right.
Just
And
anybody.
you now know, and if you're talking to someone else who does have kids, you can be like, hey, don't know if you heard about this, but you should chat with your
Yes.
CPA about it.
Right. Okay, so meat and potatoes. I want to get into retirement investing, and then we'll roll into some Q&A that was left at registration that was really good and really vulnerable. So I want to talk about future us for a second, right? The version with great skin and a thriving business and a fully funded retirement plan. Let's just sit in
Oh,
that moment for a minute.
I love
Um,
that.
doesn't that just feel great? That's
Especially the great skin part.
I know. It feels like that's how it's supposed to be.
Yeah.
Um, so you don't actually need to be rich to invest. You just
Oh.
need to be consistent.
Mhm.
And I know that most entrepreneurs feel so behind here, or like it's just never going to happen to them. And I know that that's because a lot of the times what we hear about investing, what we see about investing, what we're seeing on social media is a super wealthy investing, getting payouts, being able to buy a house with their investment, and that's all great. But that's not the everyday person.
No.
And just as many good things can happen to you if you just start investing the right way. So,
Mhm.
and I think a lot of people think like I barely understand my taxes. How am I supposed to invest in something? Noted, totally valid. Hear you.
Mhm.
So what's something that you tell clients who never thought they would get to invest in anything?
Yeah. So I think first, I want to say that if you haven't been investing for the past however many years, that's very normal for entrepreneurs because a lot of times we are investing a lot back into our businesses. So I don't want you to think that you're alone in that. We see that a lot. I have been there too, where there have been a couple of years where investments maybe were very minimal. So,
Yeah.
because you just need to pour back a lot into your business.
But a
And
dollar's a
that's,
dollar, right?
yeah, right.
A
A
dollar's
dollar is a dollar. Um, so whatever you can do is great. It's better to start and get, I think, just get in the habit and get comfortable with it. Um, even if it's, $100 that you can do. And it doesn't have to be super complicated. I know there's a lot of like business retirement accounts available, and that floats around on social media too. But you don't even have to go there yet if you don't want to. You can invest in like a traditional IRA or Roth IRA, which is available to anyone who earns income and shows, income on their tax return, essentially, as long as you have that. So whether you're in corporate or you're an entrepreneur, you can invest in that. And I think for 2025, those limits change. But I think it's up to 7,000 this year. You can invest in a traditional or a Roth IRA. And that's a great place to start. And I tell people, like, if you're not going to invest more than that in one year, like, just start there. It's much easier. It's always with you. You don't have to like, change things or whatnot. If you stop your business or, it's just always under your personal name. You can always contribute to it based on some rules, but it's a great place to start. And you can open that with any like online brokerage. So, a Fidelity, a Charles Schwab, anything like that. You can open one of those online and contribute.
So let's say that that's what
Mhm.
we're going to give everyone homework for. We're going to say
Yeah.
you're going to open this account.
Yes.
How do you want them to make their first investment? Can you walk us through this process like we're five
Yes.
years old?
Yes. Okay. So I will give easy and then a little more DIY. So one, you could literally just, I like Fidelity and Charles Schwab. So if you're like, I don't even know where to start with one of those. Like those are two of the big powerhouses. Just choose one. I don't care. Um, choose one of those and that's who you're going to open it with.
Okay.
Now, step number two is probably deciding which one you want to go with, traditional or Roth. Traditional is where you're going to get the tax deduction now, but when you pull it out in retirement, you're going to have to pay tax on it. Roth IRA is vice versa, where you're not going to get a tax deduction now for whatever you contribute, but when you pull it out in retirement, it'll be tax free. So you won't have to pay taxes on that. So pick your poison. There are income thresholds with both of those. Roth IRAs, up to a certain amount, you can contribute. Once you get past that, you have to do what's called a backdoor Roth. Complicated, reach out to your CPA. Traditional, there's also some um, rules around like if it can be deductible if you earn too much.
Mm,
And it's also based on like if you have access to another retirement plan or your spouse does. It's unreasonably complicated that the IRS makes some of these tax deduction rules. So again, I keep saying like ask your CPA, but truly like things are so specific.
yeah.
Just reach out or, find a CPA and be like, can you just take a look at this? Um, and just see like which one makes the most sense based on where your income level is. So
Yeah.
that's probably number two. So number one, pick a brokerage. Number two, reach out to your CPA to see which one is best, traditional or Roth. Then you're going to go to Charles Schwab or Fidelity, and you literally can open one online. So you'll just click open one. You can also probably just reach out to the support and say, I need help opening one of these. They'll connect you to someone to help you do that.
Yeah.
So,
Yeah. I think too, a great opportunity here is to remind everyone that if you need help finding a CPA, or you want to talk to like-minded pros that are in your area that have already done this or connected with somebody, regardless of budget or where they are in their business or, what they've got in the bank, Facebook group. Just get on and ask.
yes.
Because everyone has someone that they've used or that they've talked to. And so this is
Mhm.
a perfect opportunity. End of the year, everyone's kind of slowing down. They've got the time to chat about it. Just post in your favorite vendor Facebook group to say,
Perfect.
hey, looking for a CPA, looking for investment opportunity, right? Just all of that, open up that
Mhm.
conversation. And I guarantee that you'll find somebody, which is amazing. Um,
Yeah,
and so
absolutely.
that's great.
Yeah.
Okay. And then do you have an app, like a favorite app or tools that you found that you use?
For investing,
Yeah.
honestly, I don't utilize a lot of apps or software. So I probably can't speak to that, but I will counter. Do you?
I mean, I know the ones that are like really popular or at least just touted, right, on social
Yeah.
media. Acorn.
Yeah.
There's that other one that's female owned that now that you just asked me, it just left my brain.
I
Uh,
will tell you my one of our clients, her first 100K has an investing platform that I think is really good. So that's something
okay.
that people can look into too.
Love
So
Great. Yeah, if you have
yeah,
any, please put them in the comments. We'd love to hear. Um, oh yeah,
yeah,
Tori. Yep.
she is. She's wonderful.
Great. See, Sari to the rescue. Okay, so speed round, couple second answers, and then
Okay.
we'll bust out some of this Q&A. What's something everyone will regret if they don't do it by December 31st?
Um, I would say update their bookkeeping and we'll just leave it at that.
Done. Fair enough. Fair enough.
Yeah, yeah.
What's a tax related hill you'll die on?
Um, just because it makes sense for tax purposes doesn't mean it makes sense for your life. Don't just do something for a tax strategy. It has to make sense in the bigger play of your life and your financial strategy.
Can you print that on a bumper sticker and
I
then
know, right?
put it out in the world?
Hmm.
What is the one bookkeeping mistake that instantly shows you someone is running their business on vibes and not systems?
One, probably not having it updated, and two, not reconciling their bank accounts. Because if
Okay,
you don't reconcile, you don't know if anything's correct. So
right.
reconcile.
Reconcile. What's something you wish every entrepreneur understood on day one?
Oh, um, in terms of taxes or just in business?
Both.
I would say that business wise, there are times that it's going to be hard and that's okay.
Mm.
Um, tax wise, I would say um, getting a CPA or investing in, once you get to a certain point, investing in some bookkeeping. But I would say having someone look at and do your taxes is probably a really good investment initially.
Amazing.
Mhm.
Amazing. Congrats. You survived the speed round. We know, listen, we're not supposed to know this stuff by instinct. We learn it by being brave enough to show up to conversations like this and listen and want to do the right thing and want to do the work. This has been amazing. We have just a few more minutes, and let me tell you the questions that people asked in registration, they're good. They're, you know.
Love it.
And before we jump into that Q&A, here's what I would love for everyone to do. We are so appreciative of Brittney's time today and for this conversation. So, number one, I want you to think of your biggest aha moment from today. I'd love for you to head to Instagram and snap a pic of your screen and tag RPC and Brittney and share your big aha moment. I know, smile. Um,
Smiling at peace.
Share your aha moment with us both because it truly, truly makes us so happy to know what resonated with you, and just to be able to see that collaboration in out in the wild is so great. And Brittney, can you just let everyone know like where they can find you, how they can continue working with you, and how
Yeah.
they can just stay in touch with you and ask additional questions?
Yeah, absolutely. So website is Knies and Co. But I more so live on Instagram, and you can find me at Brittney Suttle CPA. So if you want to connect, you can always DM us there. Um, you can also, if you want to work with us. So right now we've kind of closed um, our openings because we're getting ready to go into tax season. So we aren't taking on new like bookkeeping, correctional CFO, tax only clients until next spring. But we do have openings for 1 hour consultations. So if you have specific questions, things that you want to go through, get answered around tax things or any kind of finance related matter for your business or personal, you can book one of those. And if you mention rock, paper, coin, we'll give you $100 off of that consultation if you book it before December 31st. So it's a really good, I like to say it's probably the best ROI you'll get on your money. Um, because usually we come away with like some really good tax savings or financial strategies or whatnot for everyone who does one
Yeah.
of them.
And
So,
that is an incredibly generous offer. It's you are kind of like a hairstylist, right? You like want to seek someone out that is living the life you seek to have, right? And
mhm.
so you're so relatable. You're so inspiring. I would happily spend an hour on a phone with you learning how to make money.
Yeah.
And so that is just such a generous offer. And I cannot wait to send that out with our replay and just allow people the freedom to be able to have that vulnerable conversation and just see what's possible. And I know you're going to just open up so many people's minds and hearts and eyes. So
Yeah.
thank you for that. Um, okay, so let's ask just a couple questions. I know we're a few minutes past, but we'll bust these out and then that'll be our day. It went by so fast. Okay,
Really?
so I do have two nephews that help with content creation. Can I add them? That was Jasmine, I think, when we were talking about kids, and working and hiring our kids.
Yeah, yeah, you can definitely add them. Absolutely. Yeah,
Great.
they'll still get, tax benefits, especially if they're under that standard deduction. I mean, it'll still be an expense to your business, tax-free income to them.
Amazing.
Yeah.
Okay. We kind of already answered this one, but we can just give her a little virtual hug. I didn't track anything this year, like nothing. Is it too late? How screwed am I? Not screwed. You're okay.
Everyone's, yeah.
We're okay.
You're fine. You're fine. There's still time to do it. Yeah, it's
Yeah,
okay.
you're okay. Listen to the replay about 20 minutes in. We got your back. You're going to be
Yeah,
okay.
yeah,
Okay, how do I know how much to save for taxes if my income is all over the place every single month?
yeah, yeah. I really abide by, I don't know if you've heard of the profit first method. Have you
No.
heard of that? Okay. So profit first is kind of like Dave Ramsey's envelope system where it's like, okay, you've got $1,000 and you're gonna put 200 towards rent and 50 towards groceries, but for businesses, and it's more based on percentages. So it's, let's say you bring in $10,000 per month, you're gonna set aside, let's say, 10% of that or 5% of that, whatever you want, aside for tax savings. And then that is just kind of your method of just setting aside a percentage. So it can be, I would say, if you want to adopt that and you're like, how do I know what percent or whatnot? Just book a consultation. We'll run through your numbers and we'll identify like what should
Amazing.
that tax savings percentage be. But for me, that's made it really it's systemized it. It's very easy. I know what to set aside for tax savings. And if I oversave, great, nice little bonus for myself.
Yeah, that's great. I love that. And someone actually just said, if I pay my quarterly taxes, what is the difference between that and my annual taxes?
Yeah. So your quarterly is kind of just like a prepayment for
Hmm.
your annual taxes. So think of like when or if you were ever in corporate, right? Your employer withheld taxes from your paycheck and they actually submitted those on your behalf throughout the year. Now you're your own employer, kind of. So you have to submit those because the IRS isn't going to wait until the end of the year to get their hands on your money. We all know they're broke and they need it. So if you don't pay quarterlies, you're probably going to get assessed a penalty at the end of the year for not prepaying if you owe. So it's really just prepaying those taxes. So if the end of the year your tax liability is $5,000 and you paid $1,000 each quarter, great. You've already paid 4,000 of that. You only have to pay $1,000 when you file your annual return.
Okay. And this one is, I feel like probably a lot of people feel this way. My accountant is aggressive and I'm scared to deduct things. How do I know he's not triggering an audit?
That's a great question. Um, I would
That's
say
so
this.
scary.
Yeah, yeah, and it can be scary to be aggressive, but there is tax code. So if your accountant wants to be aggressive on a certain aspect, and maybe you're like, I'm not quite sure about this, I would request, like, hey, can you document this for audit purposes of like where you found this in your tax code, why you're, stating we're able to deduct this, just so that we have the documentation of it in case there ever was an audit. And also, it's your tax return, so if you don't feel comfortable, that's okay. You can always push back, but I would suggest just requesting like documentation that you can keep for your records on that aggressive stance.
Okay. And then here's this last one, and I put this in here because it just felt like a hug. Thank you for this webinar. I feel so embarrassed about not knowing this stuff because my business looks really good from the outside.
Oh, well, let me tell you.
And I
We
think that
all
that's
have
a
dumpster
lot.
fires in our business that no one else sees. So
That's
it's
exactly why we did this talk today, was
Mhm.
that comment right there in registration. I was like,
Yeah,
oh my gosh, first of all, let me give you a hug. Second of all, you're in the right place. This is why this conversation is so
yeah,
important. And there are so many people that feel exactly like you.
yes. And no shame around it. I mean, we all have so much on our plates and so much to do. So it's very easy to get caught up in, the client deliverables and sales and all of that. And sometimes it takes the back burner and that's okay. But if you can come up for air and start to make just simple moves, just do one or two things to move yourself forward, that's
Yeah.
all.
Yeah. Oh,
Mhm.
My friend, thank you so much for being here today and for lending your expertise and your experience and teaching us so much about a topic that is obviously so important and so valuable. This was amazing, and thank you so much for your time. I
You're welcome.
just I'm so grateful for you and your generous offer and all the things that are going to come with the replay. So if you have more questions, please go ahead and send them our way. We will make sure that Brittany gets them before we send out the replay, and then we can go ahead and get those answered. And thank you for listening. And don't forget to tag us on social media today, sharing what you learned. And we will see you all next month with a special holiday version of RPC Money Talks, where we bring on past guests and have a lot of fun talking about what they hope to never see again, trends they're super excited about that are coming, and just all the fun bloopers they experience throughout the year. It is going to be really great. So we hope to see you all there. Look out for that invitation. And Brittany, thank you, my friend.
You are so welcome.
Bye, everyone.